Hey, each tech giant you know today, Facebook, WhatsApp, Google, was once a scrappy startup. And behind every one of them stood someone who believed in the vision, took a risk, and made an absolute fortune. These bold early bets are called venture capital investments, and they've built empires for investors. In this video, you'll discover how venture capital works, the biggest VC success stories, and how you can start investing in startups without needing millions in your bank account. Venture capital is a form of private equity financing where investors, known as venture capitalists, fund early-stage startups that show high growth potential. In exchange, they receive equity or partial ownership in the company. Traditionally, these investors are part of venture capital firms, institutions that pool money from wealthy individuals, corporations, or even pension funds. Now, you might think it's all just luck, picking the next big thing, but venture capital is as much science as it is art. When VC firms evaluate startups, they look at several core factors. The team behind the business is crucial. Are the founders passionate, experienced, and driven? The market size is another big one. Is the startup targeting a niche group or a massive global audience? Then there's traction. Is the company already showing signs of growth and customer demand? They also consider the uniqueness of the product, the scalability of the business model, and whether the startup can achieve a big exit, an IPO or acquisition, within 5 to 10 years. In essence, venture capital is about taking calculated risks on unproven but promising ideas and hoping to hit the next unicorn. The history of venture capital is filled with jaw-dropping returns. Let's walk through a few legendary stories, the kind that built billionaires and transformed the business world. One of the most famous examples is WhatsApp. Back when the messaging app had only a few million users and almost no revenue, Sequoia Capital saw its potential. They invested $60 million over 2 rounds and became the company's only venture backer. When Facebook acquired WhatsApp in 2014 for a staggering $22 billion, Sequoia's stake was worth over $3 billion, a return of 50x their original investment. Not bad for a quiet app with no ads. Then there's Facebook itself. In 2005, Accel Partners took a leap of faith and invested $12.7 million in a social network that was, at the time, just for college students. People thought they were crazy. But when Facebook went public in 2012 with a $104 billion valuation, Accel's stake was worth an incredible $9 billion, making this one of the most lucrative VC deals ever. Then there's the giant of e-commerce, Alibaba. Japanese firm SoftBank took a bold risk in 2000 by investing $20 million in a young Chinese internet company led by an eccentric English teacher named Jack Ma. Fast forward to 2014, and Alibaba launched the largest IPO ever, valuing the company at $231 billion. SoftBank's stake had ballooned to more than $60 billion, a 3,000 times return that remains unmatched. And we can't forget about Google. In 1999, when the search engine was still just a smart experiment run by 2 Stanford students, Sequoia Capital and Kleiner Perkins invested $25 million. That bet paid off in spectacular fashion. When Google IPO'd in 2004, their combined investment was worth over $4.2 billion each. Their foresight helped launch one of the most transformative companies in modern history. Those are only a few examples from thousands. For decades, venture capital was an exclusive club, reserved for the ultra-wealthy and well-connected. But the game has changed. Thanks to equity crowdfunding, anyone can invest in early-stage startups. Through online platforms like Crowdcube, 𝐃𝐨𝐧'𝐭, Companisto, and others, startups can now raise money from the public in exchange for equity. That means you can invest as little as €100 and become a shareholder in a company you believe in. The process is simple. A startup creates a funding campaign on one of these platforms. Investors, from beginners to professionals, can browse, read business plans, watch pitches, and invest directly through the website. If the company succeeds, you earn when they exit. If they struggle, well, that's part of the risk. But you're not just buying shares, you're backing dreams, ideas, and innovation. It's accessible, exciting, and potentially profitable. Plus, you're not just investing in the next tech unicorn, you're also helping it grow. At crowdinform.com, our mission is simple. Make startup investing accessible to everyone, not just the rich, not just the pros. On our platform, you'll find trusted reviews of equity crowdfunding sites, learn how to spot high-potential startups, and get updates on the hottest investment opportunities out there. And don't miss our YouTube channel, where each week we highlight the most exciting startups you can invest in today. So, whether you dream of finding the next Google or just want to support innovation while growing your wealth, now's the time to start. We wish you successful investing, and we'll see you in the next video.